Hey there, ladies and gentlemen. Thank you so much for joining me. You are now just joining us here, getting ready for the live stream, Be the Boss of Your Money, about so many things. Personal finance is the key, though. Welcome to the place to learn about personal finance. Includes so many things, investing, being better with your money, and overall, the goal here is to have a positive impact on your life. We've got a couple of things to talk about because, as usual, the reason I have content to talk about every day is because there's always something so crazy going on in the market. Every day is a head scratcher. Friday spilled into today. Massive margin calls. I think some major malfeasance on the part of a hedge fund called Archigo. We need to talk about this because it just ain't fair that someone's actions can ruin it for everybody else. Quick market update. I was out last week. We had some things going on. I could tell you all about it. But let's roll the intro. Let's make sure we get into this. This is going to be a good show. I want you to walk away better with your money. We're going to go through some updates right now. Here we go. Hey, thank you so much for joining me. If you're watching this in the live stream right now, definitely hit me up with any questions you may have about the subject matter we are discussing today or something else that relates to investing, personal finance. I love talking about stocks. I love talking about personal finance. Today, I have something to say about personal finance, and I'm kind of on this kick and about how aggressive should you be? How do you define your risk tolerance? Things like that. I also want to talk about this crazy, huge margin call. If you haven't heard about it yet, there were a number of stocks like Discovery Communications. You've heard of them, the Discovery Channel, Viacom. These stocks plunged toward the end of last week, just absolutely obliterated, yet they went up so much. So people were trying to figure this out. I mean, Discovery is a stock that I had a position in, and I got out of it because I was like, that was enough. It had gone up a lot. The streaming wars are really intense. I don't know if Discovery is really one of the companies that is going to be a sole survivor. And then all of a sudden, the stock just flew right like a rocket ship right after. And I'm like, what the heck is going on? Like, is there something I'm missing? No, I wasn't missing anything. The stock was being basically bought up by an over-leveraged hedge fund that finally blew up. The catalyst was last week. We'll get into that when Viacom decided to do a multi-billion-dollar offering led by Morgan Stanley. And that's what started the downtick. When you have these highly leveraged funds taking these highly leveraged, massively leveraged bets, it takes very little for something to change course, for something to break, and that's what happened. It's just a lot of confusion it caused. We're going to talk about that. Quick update in the market. And again, if you're watching this in the live, hit me up with your questions. If you're watching this in the replay, your questions are very important to me. I know not everybody has the time to watch the show at 4:30 every Monday through Friday. But if you're watching this in the replay, definitely, ask me your questions in the comments if you have any. Words of wisdom, words of encouragement are always appreciated here on Be the Boss of Your Money. I would love to hear from you. It's the best part of what we do. So let's get into the market today, and then we're going to talk about some personal finance. By the way, if you're watching this during the live stream, if you give it a reaction, thumbs up, a heart, something, I'll be able to see your name. I'll be able to see who's watching, and that's always fun. If you don't want to shout out, that's okay. Don't give it a like. I mean, privacy is important. I realize that. Maybe you're in the securities industry. Maybe you are one of my fellow financial advisors. And if you have any questions or any comments, questions, words of wisdom, whatever, I want to hear about it because I share. And there's a lot of really good financial advisors in my network from all over the country, and I'm always happy to talk it up with you. So here we go. Let's do a quick share screen. Put myself up in the corner. Okay, here I am. You see me? I'm in the corner. Okay. Let's make this a little bigger so you can see it. You know, I was out last week, 1 week, and I'm like, I forgot how to live stream, how to talk. And I'm like, how did I do this again? Like, what do? I hit the live button. Do I aim the microphone in front of my face? Like, point it at my mouth, right? There we go. 4 fingers away. All right, here we go. The Dow, in spite of everything, had a pretty decent day. You know, okay day, up 98 points. No complaints there. S&P was barely off a fraction. NASDAQ was off about 80 points. Overall, I would say it was a pretty quiet day. I wouldn't make much of it. It's a holiday week. We're between Passover, Seder's, Palm Sunday, Easter Sunday, you know, Good Friday coming up. It's a big vacation week. So I expect things to be a little quiet, a little light. And even though next Friday, Good Friday, the stock market, the bond market were closed, the non-farm payrolls for March are still going to be announced on Friday, but nobody's going to be able to react to that until the following Monday. So that's when I expect things to pick up again, the following Monday. So for the next 4 days, it's just a 4-day week. I think it'll be pretty quiet. No major earnings announcements coming out. I didn't see any Fed speeches on the calendar, any, you know, Federal Reserve officials making speeches. Didn't see any of that. Gold off about 23 points. Oil was up back to, you know, the low 60s for a little bit. The U.S. 10-year was up a little bit. I think that helped take a little steam out of the market at the end of the day. The VIX was up 2 points, still about 20. I'm not too concerned about that. Transportations are off a little bit. Let's go down here. Soybean was off, corn off a little bit, wheat up a little bit. I think it's more important to take a look at the bond market. Short-term rates are down a little bit. Long-term rates are up a little bit. The yield curve remains steep, and that keeps me bullish on the economy. You know, an inverted yield curve is a lack of confidence. An inverted yield curve, steeply, well, not inverted yield curve, a upward sloping normalized yield curve. It's pretty steep right now, so that should keep you pretty bullish, I think, my opinion. So let's just take a look at how crypto did. So I put a poll out on LinkedIn, and if we're connected on LinkedIn, go look me up on LinkedIn. Go hit my profile. You'll see the poll. Would you buy a Bitcoin ETF? And some of the answers were interesting. Some people said, why would I buy an ETF for, you know, a one-trick pony? If it's just going to be Bitcoin, I'll just buy Bitcoin myself through Coinbase. I don't need it for that. And that's a good argument against buying a Bitcoin ETF. I should have asked, would you buy a diversified crypto ETF where it's not just Bitcoin? The answers, though, range from hell yeah, it's the money of the future to no way, there's no fundamentals, no intrinsic value, there's no way to value it. It's just fake money. And maybe the blockchain is worth something. I saw news today on the Ethereum blockchain. I forget which company. One of the major banks is using a US dollar coin. I have to look that up. I didn't really have a chance to get into that today. It's new information, and I don't want to talk about it too much yet until I know more about it. And if you have any questions, folks, hit me up with your questions in the comments. So let's take a look at crypto. I have to make this smaller to see it. Okay. Markets, crypto. Anyway, so crypto is up to 57,000. So it's doing quite well, but like people keep knocking it and saying it's ridiculous. There's no business to it. There's no fundamentals to it. I get that. I could. It's a lot easier for me to give you the bearish view on any crypto than it is to give you the bullish case. I don't want to overly get into, well, I want to make sure I keep them equal because I don't want to come off like I'm making a recommendation on the show of either one. I think it's important to talk about use cases and what could be potentially a big thing. Is it the money of the future? Is Bitcoin just an experiment? We're just going to learn a lot about it, and then we'll just move on to a bigger, better crypto. Maybe the Federal Reserve will come out with a dollar coin, a better, you digitize further the US dollar, because the US dollar is pretty much digitized as it is. I mean, yes, you could use cash, but most transactions don't happen in cash. I mean, when GE sells, or how about this? When Boeing sells, billions of dollars of aircraft to Southwest, which was a big news announcement today, Southwest isn't sending over truckloads of paper money. It's all done through contracts and digitally. It could be on a blockchain, I guess. When the transaction's complete, it happens on the blockchain and everybody sees that it's official. Okay, so Bitcoin had a good day. Ethereum up to $1,800, up over 8% today. Ripple, 54 cents a coin. Litecoin. There getting to be a lot of coins. I don't see Doji. Oh, here's Doji, 0.054 cents a coin. I think a lot of people like to play with the cheap coins because they feel like they could get a lot for their money. But if you're just talking about investing a dollar amount, $500 into a coin, or 1,000 or 5,000, whatever you're putting into it or more, what's the difference? How many coins you get? It's all percentage based anyway. All right. And other big news, and I think this is a super big positive, one dose of Pfizer or Moderna vaccines is 80% effective in preventing COVID. It's not just that, because there's a 20% chance you could get COVID and some symptoms, but it's almost a perfect score, almost 100% preventing hospitalizations, severe disease, and death. So I feel, from what I read, it looks like one shot of the Pfizer or Moderna vaccine is every bit as good as the Johnson & Johnson. And there's an argument to be made that maybe instead of giving everybody 2 injections of these 2 Pfizer Moderna vaccines, just give everybody one, and you'll roll it out a lot quicker. But it does look like anyone who wants a vaccine now can get it. From what I've seen, and anecdotally from all my friends who are getting shots now, getting jabs, it's all over the place. I bring this up because that's a key worry about the market right now. Okay. Let's talk about Archegos $20 billion move to flee certain names. They say it's $20 billion and led to some banks tumbling. And let's see how some of the stocks did. I'll take a look at Discovery Communications. That'll just come up in a second. We'll take a quick look at the chart. It'll come up pretty quick. It comes up a lot faster with the share screen that I'm using now, but we'll take a look at the 3-month chart. Look at that. I mean, that is a pretty serious move up and even faster down. What happened is, what I think happened, the way I'm going to describe it to you is this. Archego is a family office. It's really a hedge fund whose customers are very wealthy people. I don't know how many customers Archego has. And they used derivatives to leverage up their holdings in these stocks. Now, why did the fund manager of Archego decide to go so heavily into some of these media stocks is beyond me. A lot of people are questioning the ability of Viacom and Discovery. They're questioning their ability to compete with Disney Plus and Netflix. Like, it's, we've seen that once an industry evolves, it's usually conquered by 1 or 2 big players like Amazon and online retail and web services. So let me go on here. The leverage may have been 100 to 1. It may have been 1,000 to 1. And it was a way that it wasn't disclosed. The manager of the fund, when you leverage, it's like borrowing money, right? Leverage is borrowing money. It's every time you use a derivative to help you leverage your position, it's usually a known entity, especially in the options market. It's very regulated. But in this derivatives market, where this manager did this, you don't have to tell anybody. It's like a dark pool. You don't have to tell anybody about it. And the banks on the other side of the trade probably didn't realize the extent to which this fund was levered up, didn't know the extent, or even maybe didn't even know about other banks that were helping it lend, okay, to them. Well, if I didn't share the screen, let me just do this right here. Okay, here we go. So you see this chart. This is Discovery Communications. It was in the 70s, 77, down to 41 in the space of 3 days. So I don't think the fund manager told one bank about the other banks it was leveraging up like this. Somebody had to sell this fund the derivative contracts in order to give this fund the ability to lever up. But if you know that they're already levered up, you're taking risk as a counterparty, you might not enter that transaction. So I think that the fund manager didn't disclose that he had such big positions in these companies. I haven't been able to confirm this, but I've heard that he had well over 5% of these company floats. And you're supposed to disclose these kinds of positions to the SEC, and part of that is to help avoid market manipulation, and part of that is to help avoid a situation like this. So there are a number of banks. The bank stocks today took it on the chin, in spite of the very positive environment for bank stocks right now. Some bank stocks, especially some foreign banks like Nomura, Credit Suisse, took pretty big hits, and it's still not fully understood how big of a financial hit these banks will take. I'm sure there'll be some kind of litigation that goes on for a very long time. Okay, so that is what's going on. That's like the big story. That's the big story today. Industrials had a good day. Boeing was up $5 against. They received an order for 100 MAX jets from Southwest Airlines. It's very positive. 3M, Caterpillar, Waste Management, Honeywell. It was overall a pretty decent day. Southwest was off a little, but still, just to see Southwest over 60 is pretty good. That stock's done very well over the last couple of months. Let's take a look at some of the other stocks that we always take a look at here. The FANG stocks. Facebook, 290, was about 270. The government said they're going to take a look. Antitrust, the Justice Department is going to look at Facebook. People worried that it could be broken up. Facebook had an initial dip. I said right here on this show, let me just get rid of that. On the show that I said right here on the show, I'm not making any decisions to buy or sell Facebook because of a antitrust litigation or the Justice Department taking a look at the company. And lo and behold, the stock is a good deal higher than when that announcement came out. So Facebook is looking good. I think it's because the economy is reopening, and companies, cruises, airlines, everybody, everybody who has anything to do with the economy reopening is probably advertising like crazy, because the expectation is we're getting a rush of economic activity, economic improvement. Stimulus checks are going out. The second half of this year is expected to see a really solid economic boom. We're getting it now. So I just think companies are advertising, and that's helping companies like Alphabet, which owns Google, and Facebook, because it's just, if you're not going to push it and advertise like crazy right now for whatever you're selling, then when the heck are you going to do it? Right now, as my father used to say, make hay while the sun shines, and the sun is shining. Microsoft off a little bit, but 235, it's still holding up pretty good. This is one of the reasons why the market held up so well, because if we take a look at tech in general, a lot of stocks are coming off today. Paychex, Intel. Intel had a big rally last week. Qualcomm, Twilio, ServiceNow, Broadcom. What happened? I thought the semis were only supposed to go up. Broadcom went down. DocuSign took a hit. Zoom continues to take a hit. Zoom was almost $600 a share, and it looks like it'll be the twos pretty soon. Okay, so I'm just I'm not showing you my screen. I'm doing this. I hope that's okay. So let's just take a look at one more thing, a personal finance thing. I already spoke about this. I want to speak about it again. Well, we have a couple of minutes left. Personal finance matter. If you're taking more risk in your portfolio, you would expect to earn a higher return, right? You would. So let's say a person is 100% stock versus a person who's 70% stock and 30% bonds. Over time, I mean, I believe the 100% stock portfolio should do better over time. That's what we would expect. Riskier portfolio, higher potential returns. Potential. But this is where personal finance comes in, because my job is to help you with creating and crystallizing your financial goals. It's one thing to say, I want to retire one day. I want to send my kids to college one day and pay for it or substantially offset the cost. Those are goals. Okay, so let's talk about the main one, retirement. Yes, your goal is retirement. It's my job to help crystallize that goal in your mind. When? What will you do during retirement? Where do you think you could be living during retirement? How many years will you have been at your company? Do you think you'll be at the same company? Do you own a business? Do you think you'll be able to sell your business? Are you taking steps right now to make your business saleable down the road? Because I'm telling you right now, if you're a business owner and you want to sell your business and all you could show is how much money you've pulled out of your business to pay for your personal expenses, like your cell phone, your cars, and your country club and all that, you're not really giving a buyer a very good idea of what your business could really do. People who are overly aggressive, and I'm a business owner too, so I've seen this with my business owner clients. Some doing it right, some doing it wrong. If you're overly aggressive and taking money out of your business to pay for your personal expenditures, over the long run, you're actually hurting yourself. You're not helping your business. Just want to let you know, you think you're saving money on taxes, but what it's going to cost you in the long run in terms of the value of your business, it might not be worth it. So we have to talk about these things. How are we going to get you to retirement? How much money do you think you could keep putting away? How cyclical is your business? I mean, if your business is tied to the economy and the economy has ups and downs, what are you doing to keep money aside for an emergency fund? So if you have someone, like I was saying, client A with 100% stock and client B with 70% stock, 30% bonds in their portfolio, you'd expect client A would do better over time. But if client A is not ready for a downturn, doesn't have an emergency fund, is prone to panicking when his or her account goes down, then I would say client B will actually do better, because staying the course, time in the market, not timing the market, is more important than having just a more aggressive, a higher risk portfolio. I hope that makes sense to you. And that's the key of all this. That's what puts the personal into personal finance. It's not some cookie cutter thing of here's your pie chart, see you later, I'll call you once a year. It's about keeping you on track. For me to get you into the right portfolio is not the hardest thing. For me to get you into the portfolio that's right for you, yeah, that takes effort, that takes work. But then to keep you with it takes more effort. That's where the relationship comes in. And sometimes your risk tolerance could be higher than you thought it was. Market goes down and you realize, maybe my risk tolerance wasn't so great. But instead of panicking and selling out now, let's wait for the next recovery and then make our adjustments at that time. All right, I've said enough. I really appreciate you joining me. Your time is very valuable. I appreciate that you chose to spend some of it with me, and I will see you tomorrow.